The goal with charting is to separate the signal from the noise. Welcome, everyone, to the Gibraltar Weekly Stock Market Review and Forecast. I'm your host, Dr. BJ Love, and I will be bringing you this week's update for August 5th, 2024. Here at Gibraltar, we use time-tested indicators and methods that helps us to navigate these markets with confidence, certainty, and calmness. The NASDAQ dips into correction territory. The dog days of summer are here, and the stock market gives us a brutal reminder of this. The first trading day of August began on a very pessimistic note. The summer sell-off hit its stride this week or last week, led by a 3.4% drop in the NASDAQ and a 6.7% tumble in the small cap Russell 2000. The energy sector was weighed down by a drop in crude oil prices on concerns of slowing growth despite the tensions in the Middle East. For the period, the Dow Jones Industrial dropped 852 points and settled at 39,737. The S&P 500 lost 113 points and closed at $5,346.56. The NASDAQ tumbled 581.72 points and finished at 16,776, while the Russell snapped a 3-week winning streak, giving up 150 points and settled in at 2,109.31. The VIX, aka the fear gauge, spiked 25% and closed at 23.39 after peaking at 29.66. As we know and we iterate here, as long as the VIX stays below that 20-point threshold, we would grind higher. We have witnessed that since October of last year, and now we see the VIX spiking up to 23 or to 29, and as of today, it got above 60. Now you can see the inverse correlation that it has with the market indices. The market indices go down when that VIX number goes past 20, and we have witnessed that firsthand this week. Gold prices hit a new record high before and finished at $80.20 an ounce. Bitcoin closed the session at 62 on Friday and at 62,900. Breath, the heartbeat of the market was bearish. Market outlook, the technical condition of the market deteriorated this week as different indexes traded down. So let's see exactly what had happened on a weekly basis. This is our 1040 grid, where we use as our foundation or our bedrock, if you will, as far as giving us accurate readings on market direction. We're going to start here with the S&P 500. And if we maximize it, we can see last week's action, about 3-week slide, cutting through that 10-week moving average, and that moving average is turning downward, and we're moving toward that 40-week moving averages. This is our line in the sand. The first one is like a warning, that a downturn is imminent, and that has happened over the past couple of weeks here. And now you can see that today, the first day of the week, the S&P 500 hit that 40-week moving average, which is still rising. We do have a momentum shift in the market, but we still have that green background letting us know that this could just be a correction. We are in a bull market, but it's now correcting. As you remember, we've been up and away since October, and at some time that had to end. We did have a little bit of a 3-week interruption back in April, and continued to move up to new highs, and now this is the 4th week that we're starting to go down, and we're looking at the S&P 500 touching that 40-week moving average. If it bounces off, we could be off to the races again in a recovery. However, if it slices through and closes below that, then we can be in for a longer term correction. So that is the S&P 500. We'll see how we're looking on the Dow Jones Industrial. As you can see, same type of scenario, a little bit more volatile than the S&P 500, but we have a big week down last week, and it is continuing this week. However, we have not come to touch that 40-week rising moving average yet. Hence, we still have a green background. Bull market in correction. Bull market in correction. All right, moving on through the NASDAQ, the tech-heavy NASDAQ, we see a little bit more of a pronounced downtrend. 1, 2, 3. Now this is the fourth week. However, we do have an open box and candle, and it did close above that 40-week moving average, even though it broke through it earlier today. We do have a confirming indicator here on our MACD that this could be a continuation of a downward trend. We'll just have to wait, watch, and see. Still, we have about a green background showing a bull market in correction. Bull market in correction. And same thing here with the Russell 2000. We had a very strong down week last week and started today as well with a gap down. However, it did close above this rising moving average, a line in the sand, our hard go-to support, if you will. You see it happen here back in April when it bounced off of that rising moving average and began to rise again to new highs. However, we do see our confirming indicator, the MACD, showing that the momentum has shifted from up to down. So we are in a confirmed down. However, it's still in a bull market with green background. What about takeaways here? The market is going through a correction. We did enjoy up since October, almost 8, 9 months of continued upward price. Here it's taken aback a little bit. On one thing, never mind. It's taken back a little bit of those profits. However, we can still have to wait, watch, and see if this market continues to correct in with a green background, or if it will turn red and we'll be in a bear market, meaning that we will have to take the appropriate action. So with that said, again, we are in a bull market, and the bull market is correcting. So now what we're going to do is go to our triple screen. Here we go. And on triple screen, we can see the same action happening on the NASDAQ in a different format, still above this rising moving average in the market, but it seems to be taking a little bit of a personality change. That green line is not rising anymore, it's going flat, and we do have a confirmed down with our Fisher transformer, which is our leading indicator. So that's with the NASDAQ. We're going to move to the S&P 500, and we can see the same type of action happening there. It landed right on this rising moving average. However, we do still have selling pressure because of our SAR, our stop, and repeat indicator showing selling pressure, and confirm with the Fisher transform and the MACD. We want to look at the Russell 2000. It just started this week to show selling pressure continuing, and then also with the Dow Jones Industrial Average. It's been holding up pretty well, but this week it has shown increased selling pressure. However, we're still above rising moving average. Bull market in correction, as we forestated in the charts with the 4 grid. What we're going to look at now that is of interest is oil. As you can see, this is a weekly uh, chart of oil. Looks like oil had a 3-week slide coming into the third week, and it looks like that slide may continue, closing today at $73.75. Also, we're going to look at the VIX and see how it fared. This is a weekly chart of the VIX, as you can see, for weeks and weeks and weeks, almost a year. Here is a 1-year chart, and up until 7:15, the VIX started to rise, show some signs of life, and now his relative strength has spiked, and we do have a sustainable VIX that is above that 20-point threshold, and looks like it is sustainable for now. Until this changes, you're probably going to see more and more volatility in the market. So that's a daily look and a weekly look at the VIX. What else are we looking at? We looked at oil, we looked at VIX, we mentioned gold, GLD. Gold is seen to be holding up on a weekly basis, even though it had a 2% uh, uh, pullback today. We'll wait, watch, and see how this pans out. He just seems to be steady and still above this rising moving average, just consolidating. We're going to look at silver. Silver has come down for the past 3 weeks, touching that rising moving average. So we'll wait, watch, and see if that uh, will that support will hold, and if it bounces off and starts to move up again. But as for right now, I'll stop and reverse. SAR, SAR is giving us a signal that it is still under selling pressure. However, the relative strength is good, but our momentum indicators are pointing down. All right, moving on now to Bitcoin. Bitcoin took a bit of a hit, and we're going to look at how he fares. Let's see. Okay, right now Bitcoin is showing that it has reversed this week from that upward move. It went all the way up to 74,000, and then just kind of had a week-to-week slide. Right now we're at a big selling pressure here. All of our confirming indicators look to be down. Our MACD, however, our leading indicator doesn't show right now that there is a serious reversal. When we see our Fisher transform on a weekly basis flip to the negative, that lets you know that there is a serious downturn taking place here, and we'll wait, watch, and see how it fares out or how it shakes out. Next, we're going to look at our holdings, and that main one is going to be ET. ET is holding up pretty well, but as you know, with the market, the tides either rises all boats or sinks all boats. So with this general downturn, we're seeing a general downturn off about 52 cents on ET, and ET pays us about a 9% dividend. Our tech stock, AIO, showing the same, everything is going down. If you look at Magnificent Seven, you'll see that they're having trouble as well. Looking at Microsoft, MSFT, right, he's big downturn, 3-week slide. Google, he's having the same type, these big tech stocks take down everything. We're going to look at Apple, PL. He was holding up pretty well, but this week has flipped over with stop and reverse, and he is showing that there is more downside to come. However, this correction is taking place under a rising moving average. So, and then the next one, Tesla, TSLA, and he's showing everything, is breaking down as well. So there you have it now with the big picture of the market and some of the main stocks that are bringing it down there. So we'll just leave it right there, and then we'll update as this correction is taking place. So from Here, every day and every way, we get better and better. Every day and every way, we grow more prosperous, successful, and victorious. And God's love continues to surround us and fold us and wraps us, and we go forth in peace and ever increasing prosperity.